All righty. Good morning for everyone on this Thursday of August the 19th. My pleasure to be with you this morning in the stock market. I'm just going to go through a little, I don't know, I'm going to call it a little Q&A, a little understanding of what's happening in our markets and why, and some things that we should probably be paying attention to. If you guys are going to describe our market right now, what would you tell me? If you're going to describe our market, if you're going to say, hey, Kevin, our market today is this, what would you say? What would you be able to tell me? How would you describe our stock market today? So, so I find that interesting because William just said volatile. And I'm going to question that because the VIX is at 24 right now and was as high as 41, as high, got to spell it right, as high as 41, the beginning of the year. So when you say volatile, it's interesting because the technicals or the VIX that I was going to go over and make a comment on, the VIX year to date, we hit 37, somewhere I thought we hit 41. Looks like it might have only been 37.5 intraday. So I'm not saying that we're not volatile, but we're a lot less volatile than we were earlier in the year. Nobody has a clue where the markets will go. So that's a very interesting one. In fact, that is me, Abraham. I'm going to put myself in that category. Abraham makes the comment, nobody knows where the markets will go. And with that said, I think that goes along with my Monday evening comments that we're in a financial crisis. And the financial crisis is government induced. Too much money is coming around. We just don't have an understanding or everything that's happening, or how do I say it this way? Our monetary easy cash crisis means everything that we expect to happen won't happen. And I'll be honest with you, it's a frustrating year. Jim Cole spoke with me and said, you know, you're pretty flat this year in one of my accounts. Happens to be his biggest account, right? He's like, you know, you're pretty flat in my big account this year. The other ones look great, but you know what's going on? And I think I went through this about 2 weeks ago. I pulled up Apple, and Apple's been pretty flat, and Visa's been pretty flat from where it's at the beginning of the year. Disney's down, Baidu's down horribly. We're flat. We're pretty flat this year, which means we might not see our gains or profits this year until November or December. We just might not see it. We might trade the whole year to make our whole return in a 4 to 6 week period that It's all going to come at the end of the year, kind of like we did the last 3 months last year. Now, to put some people at ease, I love looking at Baidu. Baidu's up $55,000 in general for the Hurley Investments accounts. And that's with the stock price. That's with the stock price being down. Oh, come on. Give me a second. Got to get some things cleared off of my. That's with the stock price being down $5.11 today. Of contract, having huge amounts of contract of calls, and we're still profitable $57,000 by doing nothing more than adding one extra long call contract when we broke a significant level of support. People ask me, Kevin, are you worried? Are you worried about Baidu? I'm not yet. The fundamentals are still there. This is posturing. This is posturing on the Chinese government, having them do what we requested they do forever ago. So I don't see a problem. I'm not worried to the point that I think we're in trouble. My other group, 49,000 up, not as good as the other group of people, but 49,000 up. We look really good. We're not in bad shape right now. And we can do that to any stocks that we have problems or positions with. So I'm not worried. That doesn't mean I'm okay with our returns this year. But when it comes down to it, I'm not worried about our individual positions, even though we are in all the dogs of the S&P this year. Well, Kevin, what do you mean about the dogs? Well, the dogs are usually the ones that do bad the year before and do great the next year. Right now, we're in the dogs of the S&P. So let me go through what I mean by that and to show you where I'm okay with where we're at. Apple, if you look at Apple from 2021, nothing like starting at 133, trading at 145 today, 147.35. Not a huge movement. We've gone through 3 earnings on Apple this year and paid 3 times for insurance on a stock that's moved $14. Apple has a lot of movement. It's building a base. It's moving sideways. The trend is still up. I like where we're at on Baidu. Bank of America, one of our winners this year, starts down at $30, up at 40. We have a great return on Bank of America this year. Boeing looks like crap. Boeing is right where actually it's below where we started the year. It's down $9 from when we started the year, but the fundamentals are still there in place. I'm a fan of Boeing. Baidu, thank God we protected. Ooh, Baidu looks ugly. 120 is the next level on the way down. We're watching it. We did great from 330 all the way down to 196, dollar for dollar. 196 to 150, we only made up 40% of that downward movement. And now we're making up more on the way down. From the 150 on the way down to 136, we're making up more than dollar for dollar. We're going to be okay. Ford, Great year, great run on Ford. We look halfway decent on Ford from $9 to 12. And we've added shares this year. For those that are in Facebook, great year on Facebook. We're doing really good. What are the ones I'm trying to think of? Visa. What a dog Visa's been this year. Nothing like starting the year at 219. It's at 231. That's why we changed out of share count just to leaps. We're okay on Visa. JP Morgan this year. Not bad. 127 to 154. We actually just took a ton of profit. $265,000 we cashed in for about 740. A lot of 100% return on leap positions. We did really good this year on JP Morgan. I'm forgetting Under Armour. Kind of a pooper, right? But it's up, and we've done a great job protecting it twice now at 26, once adding shares this year. Here's what I'm going to tell you. Just because the market is hard on a up year of 19% doesn't mean you throw away your discipline. Be disciplined. What does be disciplined mean for Hurley Investments? Risk-free stays risk-free. You don't go dollar cost average some leap contracts that act as stock replacement strategies. When you're in a risk-free trade, you keep a risk-free trade risk-free. You wait for the probability movements and don't try to outguess the markets. What does that mean? We don't catch tops and bottoms. We might get lucky, but our job's not to get, catch tops or bottoms. We protect. Even if the markets are sideways. You don't start running stuff without protection. You still protect. You stay rational longer than the markets will act irrational. And that's the hardest one. That's the key. It's really tough. Some of you, I sit here and I'm like, you know what? You don't like what I'm doing? You're free to move it. Go move it. Go move it and get your butt handed to you with something else. I've gone through a 2000 using this strategy. I've gone through 2008. I've back tested 96, 93, 90, 87, 84, 83, the 79 crash. I mean, what we do works. It just doesn't work every day. The hardest thing to do in trading is be patient. And if you don't want to be patient, I'm okay with that. We're good. We're good. I won't take it personally if you feel like you need to move your money elsewhere, but I tell you, you're going to get your butt handed to you. You stay the course. With that said, there were two questions that came in that I feel I need to answer because they're great questions. And here's question number one. Kevin, in the past, you told me we double portfolio every 4.5 to 5.5 years. And when people joined me 2 to 3 years ago, that is correct. In fact, if you go back and research the Hurley Investments 2020 results, you can see that we even doubled portfolios in a 2 to 3 year period of time. That was the average at that time period. Right now, we're looking like we're going to be more in that 4.5 to 5.5 year time frame, unless we get the movement we expect at the end of the year, in which case we'll double portfolios at the end of this year, and it'll be a 3-year average. But remember, averages are averages. If you want to hold people to an average, give them their time frame, and don't bug the crap out of them in between it. The second question that was a really good question. Well, Kevin, it seems like we haven't added a whole lot of shares. Correct. When things are moving sideways, we don't add a whole lot of shares. We actually are overpaying for protection, but at no time this year would I not have had what we have had protected, not protected. The only thing that I thought maybe not protecting this year were a couple of the banks that we may have run that way. And I think we ran Ford unprotected for an earnings event. But that's about it. So those are my answers to those comments that have come through. And William, I know, we know they're yours. So welcome to being on the other side of the pond and trading where your options you don't have to keep until expiration. You can trade them at any time. Faith moves humanity, but what do you do if you change your faith in a stock at a time of a significant losing situation? Great question. And Abraham, I basically do what I do or have done for Baidu. We double up on our puts on a stock today that is down $5.24. We've got 150 puts that are making $4.92. We have 165 puts that are making up $7.14. We have 157.50 puts that are making up $8.15. Total, we're making up double what our stock price is losing today. This is what made me so successful in 2008. If it's a failing situation and Baidu for some reason really goes out of business, we're going to make twice as much on the 150 to the $0 price. We're going to make $300 on the 150 movement down. And we're great. We're good. At that point in time, if it really does look like the fundamentals aren't there, we're just going to run double 2 or 3 straight puts on down. And the price levels are pretty easy. Our next set of puts will be pretty darn close to 135. 121 is the next put level to add more down. 98 is the next level after that. We might stack 4 to 5 sets of puts all the way down to 0. One thing I really learned was how to make money on a stock that's going out of business. And it was Bear Stearns back in the day. So the neat thing is, if I am managing your money and I am absolutely flat wrong on what's happening, if I can go ahead and I'll put this in writing, if I am completely flat out wrong and my numbers lied to me, we can still make a ton of money on a stock / company that is going out of business. And how do we do that? Add insurance or long puts as the company breaks support levels. This is a 2008 learning experience. Abraham asks if he had leaps instead of stock in that same position. The neat thing is you can still add long puts to leap positions. We typically don't do it. But for those that are in at 350 leaps, we break the 135. We're going to add equal share count of leaps to your leap long call position. Let me say that one more time. We can add long put positions to leap positions. And and I just got another comment that I'll make as a answer. But the short answer is if you have leap long calls, we're fine. We're fine. All we have to do is add a leap long, just add a long put, not even a leap long put, but just add a long put, and you're going to be in great shape. So another question came in that's very interesting. And again, this is someone that hasn't taken the education. So I'm going to make the comment to this individual. You'll understand more and you'll be better off with less worry if you go through the safe option strategies education. Get yourself back in education so you're going to understand. Kevin, you say the Baidu is up $48,000 while I am down $79,000 for the year. And he's talking about from the highs of the year of his portfolio. So please don't think your portfolio is down $79,000 for the year. That is inaccurate. You are down $79,000 from the highs of the year. Your portfolio is most likely still profitable or flat. So you've got to make sure you understand what you're saying. Good comment. I'm going to hate if you say that you got in at the wrong time because that's a lame excuse. Damn straight that'd be a lame excuse. You got in at the wrong time. In all honesty, the neat thing about collar trading is we take the timing to a certain degree out of the market. There is no wrong time with collar trading. But that's if you stick to your discipline and you run the process. A lot of people are going to talk about, hey, you're down right now. And please don't think in collar trading that you're always profitable. You are correct. The process of a stock going down means you make as much as you can as it's going down, so that when it comes back up, you've either added shares or taken profits to lower your cost basis. Guess what? Take the education, paper trade, collar trade, back test it, and you'll see collar trading, the process sometimes sucks on the way down, and you look like a genius on the way back up. For some of the positions like Baidu, on a day like today, it's pretty cool to be up $48,000 on a stock position that's losing $59,000. That means the protection is making up twice as much as the stock is losing today. That is the power of collar trading. Now, 2 days ago when Baidu was up, we basically lost 1.5 times. It's a process. A lot of people ask me, Kevin, why didn't you pull off protection, a couple days ago? Well, because Baidu was in no man's land, which means it has up days and down days. That's what happens. You work yourself through it, and the process of a stock going down sucks. Make up something on the way down so that when it does come back, you're going to be in much better shape. It seems that your strategy, at least in my case, is not working. Again, you're 100% wrong. If it's not working, let's talk and let's put everything into cash and you're good to go. Or take some education that you've paid for, back test it, put the effort in to understand the strategy, and you'll do better off. Um, because the market's moving somewhat sideways, however, for the year it is up. So yes, and let's put it this way. The stocks we are in are moving somewhat sideways or down while the market's up. That's what I mean by the stocks from this year are the dogs as of right now. These are the stocks that the dog stocks are what usually is down the year before that comes back and beats the market the following year. That is exactly what our stocks seem to be doing. Apple, Boeing, Baidu, Disney, Ford, Under Armour, Visa, all great quality stocks that are the dogs this year in our stock market. And yes, it pisses me off because I got my money in the same thing. It's really a pisser to be flat or up $2,000 in a $320,000 portfolio. Am I ready to sell Apple? Nope. I've got an interesting article I'm going to show you next Monday. Does that mean we shouldn't be in Boeing? Nope. Huge upside potential, great runway. They're in great shape. Would I get out of Baidu? Nope. I just went through their whole 400 pages of their last two scheduled Ks and their earnings. They're great. They're fine. Would I get out of Ford? Nope. Facebook? Nope. Under Armour? Nope. Visa? Nope. Everything I'm talking about, Disney? Nope. They're just not getting the love right now. They're the dogs this year. These are the ones you'll probably see take off and run really significantly higher next year. Run with the process. As they're going down, you're not supposed to like it. But if you can make up anything on the way down, you're going to be much better off as things come back. As I said, we might not get our gains or profits this year till November, December. We might not get them till next year. In fact, I'm really concerned our administration could really screw up our potential gains for the end of the year by increasing taxes. So at that point in time, we could be in big trouble. Great question and answer though. We've had some really good questions come in. I appreciate all of you asking these questions. If there are any more, please send them in right now and let me get those answered for you. And thank you, William. I appreciate that. Kevin, this is rather new, but I've seen in your past history and what you've done in my account that the upside is going to be significantly better when things turn around. Thank you very much. William, thank you very much. I appreciate that comment. That's the understanding of understanding collar trading and what it does. So with that said, perfect. Keep going through Jeffrey's stuff with safe option strategies and keep back testing or trading your collar strategy, and you're going to be in great shape. Is there alternative to the blue chip stocks you just named? Well, there are. I mean, in all honesty, there's tens of thousands of stocks you could be in. A lot of us, or some of us are in Micron that's just went from 93 down to 69. Well, Kevin, they suck. Well, no, they're going through a wafer shortage to make their chips. They're a great company. They've got good money on back. They've had great earnings. Would I get out of them? No, there's not a fundamental change on any of these that brings a worry to my name right now. So the short answer is there's all kinds of alternatives to the blue chips I've mentioned. Those are the ones that I've chosen because I know them well and they've treated me well in the past. Those are the ones that I know are fundamentally sound, that I feel comfortable in trading, not believing that they're going to go out of business. So yes, there are tons of alternatives, but the ones that I am in are from my research that I do every year, and those are the ones that I've chosen to put my own money in and run them. So yes, tons of alternatives. This is just what I've chosen for at least this year and for this time being. Any other questions? All right, hey guys, I appreciate you being here today. Since we didn't talk any actual trades, I should be able to get this up this afternoon. I'm a little busy. I've got appointments stacked up hour after hour through this afternoon, which gives me this evening to get my little approval, and I will have this this up today. Key stuff has also been approved. We'll have that up here this evening as well from last Tuesday. Don't see other questions coming in. Hey, thanks, Abraham. Thanks, William. I appreciate the compliment. To compliment you, congrats on going through the education and spending your time better understanding how someone's managing your portfolio. That's kind of interesting. I think what happened to most of us, we liked what we saw in the education and needed someone to do it. And there are just times that when that happens, I mean, let's face it, education is education. It's not real. The real market's significantly different than the perfect back testing or the perfect, hey, you could have done the strategy here. When you look at it, you know, in the rearview mirror, when you look at it out your windshield, it's significantly different. It's real. And right now, this is one of those years that, again, we probably will not hit our gains until November, December, and things will probably get worse before they get better as we go through a historical September and October, which are the third worst and the worst month in the market accordingly. All right, guys, I don't see other questions coming in. You guys take care and have a great one. I appreciate you being here today. I look forward to seeing you on Monday. I've got a couple articles that really have made an impression on me, and we're going to go from there. You guys take care. I will see you on Monday. Have a great weekend. Bye-bye.